All right, we're going to talk about the credit cycle and the stock market. First, I want to start by telling you I recommend you watch is about a 20-minute YouTube video called How the Economic Machine Works by Ray Dalio. I'll put the link under this video because it's so important to understand the credit cycle that we have. Now, you'll watch that video, but I'll just try to explain briefly, is that, so you know the current banking system works in that a bank has collateral. Let's say they have $100. That means they can loan out $1,000, right? And actually, it's more like $1,500. But for simple math, let's just say they have 100 in capital and they loan out 1,000. If their value of their capital falls by 20%, now they only have $80, which means they could loan out only $800. That means they have $200 in loans now that make them sort of illegally over leveraged. And so, and what you're going to understand is, so let's look at what's going on in the real world. Right now, I think the important thing to watch is what is going on in Turkey. Because what happens is when you have these peripheral countries, like if you look at what happened with Argentina, they have a problem, their collateral shrinks, all of a sudden they don't have enough money, people start selling their currency, they have a problem, and they need to be bailed out. And, comes to the rescue, the US, the central bank, ECB, the IMF, somebody comes to the rescue and bails them out, and then they're fine, they don't have this problem anymore. But the problem, and so now with Turkey, the problem with Turkey for the financial system is nobody really likes Turkey right now, right? You have a difficult president in there, sort of people are afraid, they're sort of supporting Muslims. If he's not financially, he's not playing by the game that, the Western powers want. So I don't think anybody can bail out Turkey. Turkey's having a financial crisis. They need a bailout. If they don't get it and they default on loans, then that goes to the next guy. So for example, let's say Germany has debt to Turkey and Turkey goes bankrupt. Now some of Germany's debt, Germany's collateral shrinks, which now means they have debt outstanding that needs to shrink. And this stuff feeds on itself. That's why they call it contagion, because the system, by design, is super leveraged. And anytime you have an impact on the collateral, it makes that whoever has that problem to start taking their collateral back, which causes problems in other places, and it spreads. Eventually, they come in and do the bailout. And the bailout always comes, and that's when you want to invest, once the bailout is done. But the problem is, with someone like Turkey, nobody wants to bail it out. Everybody tries to pretend that they don't do bailouts. And for Turkey, it's going to be difficult. And then Germany, if Deutsche Bank is going down, they will bail it out. But Germany always says, we don't do bailouts, we won't bail out Deutsche Bank. But when the shit hits the fan, they will. But the problem is, if this stuff starts spiraling, until that bailout comes, stocks, stocks will go down, right? Almost all financial assets, the risk. Another thing to understand with the stock market is, in our existing system, the base layer, the riskless asset, is U.S. Treasury bonds or U.S. cash, which are Federal Reserve notes. That they call riskless, right? It used to be gold was the base layer, and our dream is that Bitcoin becomes the base layer, but right now it's U.S. Treasuries and U.S. dollars. And then on top of that, you have things with slightly more risk. You might say U.S. mortgages are considered, not too risky, but not, it's the next layer up. And then you have stocks. And then when you go off into these foreign countries, so when there's trouble, the first things to fall are the things further out on the risk scale. And by risk, it's the risk as defined by the regulators who have created this system. And so the point is this. So these cycles, though, take a long time. Remember, the last credit crisis was 2008, and now we're at 2018. It's been 10 years. So once that bailout comes, you want to get into stocks and ride it, and it can go on for years. And that's where it becomes important to invest in the best companies and have good investments and hold them through that whole period. But when the credit cycle hits, look out below. This stuff can fall by 50%. So the existing sort of run since the last bailout we're coming on 10 years here. Now, if it doesn't happen for 2 more years that we get the next credit crisis, that's 2 years where you could have gains. So I'm not saying just get out of the market by any means, but you need to be very careful if you're just starting to get into the market now. If you're at the tail end of the credit cycle, you could be getting in just when the friggin' thing falls by 50%. And that means even if you own Warren Buffett and the S&P 500, which are probably your safest stock investments, if you get in just as a credit crisis gets in, it doesn't matter how great your investment is in the long run, in the short run, year or two, you could lose 50%. So you need to be careful. So I'm watching Turkey because I don't think it's going to be bailed out. And when stuff starts going bankrupt in Turkey, who gets hurt and are they going to get bailed out? When that gets settled, then I think there's a green light to sort of not have to worry about the credit cycle. Now, when it comes to investing in the market, boy, I have other things to talk about, but let's talk about what to invest in the market. So, as Warren Buffett says, one of the safest things is investing in the S&P 500. So you have VTI is one of them and VOO is another. These are good. I worry a little bit because I worry about the doomsday scenario all the time. And the reality is, if you own these S&P 500s, especially VOO, VTI is a little better, but VOO, if I go to E-Trade and I buy VOO, E-Trade says they owe it to me. They have a dealer who says they owe it to them. And that dealer has a clearinghouse who says they're holding it and they owe it to them. And they may be loaning it to other people as well. That all kind of scares me. We are far away from that going illiquid, right? We're at Turkey, which then could go to Greece. And then if it spreads to somewhere else, by the time the infection gets to the U.S., we could see this coming. The problem in 2008 was the problem sort of started in the U.S. with U.S. mortgages. And that was like, everyone was like, whoa. Usually these things start in the periphery and they do a bailout before it gets to the core. So anyways, but S&P 500 is a safe way to make gains. And something people say, I want to beat the S&P 500. Well, why don't you think in terms of, I want to beat 99% of all investors. I want to beat almost all mutual fund investors. I want to beat all hedge funds. If that's your goal, then just buy the S&P 500. Because it's so hard to beat. The other thing I like is Warren Buffett. BRK.B. is Warren Buffett, and it's almost similar to the S&P 500 in that it's an ownership of many, many companies. But I trust Warren Buffett. If that, you remember the doomsday scenario I said, where what do you really own? E-Trade owes me, and the other dealer owes me, and the thing, and who knows? With Warren Buffett, if the shit hit the fan, I trust that what I own, Warren Buffett will respect. So that's, I trust that. And also, I've said before, I like IBM, pays a strong dividend. I like what they're doing with blockchain. And it's a conservative. It's been down. It hasn't moved much. It's not a high flyer. It's not a FANG. They make money. I think they're moving forward in a way that they continue to make money. I think it's undervalued as far as, people's opinion in general. Like there's no articles about, IBM's awesome. IBM's taken over the world. And so I like that as a whole. It's so much riskier when you start picking individual companies than Berkshire Hathaway or S&P 500 because they own so many. It's just you don't have to worry as much. Tesla, I've talked about. To me, that's almost like the crypto sort of thing. I mean, Tesla, I don't know. Elon's been a little crazy lately, but that thing, it theoretically could fail, but it could also take over the world. It's sort of, again, one of these binary things. In my long-term IRAs, I do hold some. I am a believer. It's a little scary buying right now, but then again, that's the time you want to buy, right? I mean, if you believe, read the book Elon Musk by Ashley Vance. That's what convinced me that I don't think people are seeing the story, which is that he is building a better factory. It's going to be AI robots versus union workers, and I think that Tesla wins, but we'll see. It's like I said. So, for some people have said, well, should I get into the stock market? I always talk about dollar cost averaging in. I would put your time horizon on getting into the stock market now for very long. In other words, if you want to put in $30,000, I would do, I don't know, $1,000 a month for 30 months if you want to be safe, right? Just a little bit at a time, because this shit could hit the fan, and then you want to have some firepower. And I mean, if you're anything like me, and when I was young, the day you put your $10,000 in, the next day is when the credit crisis begins. And technically, it may have already begun with what's going on in Turkey, right? And we just don't realize it yet. So be careful, get in slowly, and be conservative. If you're watching this, you're probably in crypto. When it comes to beta, when it comes to getting rich, going to the moon, baby Lambos, leave that for crypto. Maybe you'll get that with your Ethereum, Bitcoin, stellar. But when it comes to the stock market, you got a lot of competition. There are very super smart geniuses who spend all day studying one friggin' company, and multiple of those people all studying that one company. You don't have any advantage in investing in the stock market. It's a diversification of your money. Like I said, something like S&P 500. Think about capital preservation, and also just right now in the news, pot stocks. When something's in the news, it's awesome and it's gone up a lot. Stay away. If you really love pot stocks, wait 8 months from now when nobody's talking about it and prices are probably lower. That stuff is crazy. So, another thing to talk about too is, what will happen to crypto during the credit crisis, right? Good question. The idea behind Bitcoin is there won't be, if Bitcoin's the base layer, if there's a credit crisis related to Bitcoin, there won't be any bailouts, right? No one's going to print Bitcoin to bail anybody out. So in the long run, the strong survive, and Bitcoin sort of grows through each crisis because it grows in value, because they don't bail out the weak and they don't bail out the losers. Now, but my feeling on this is simply that, Bitcoin's price is based on adoption, and it goes through waves, and I think this thing is in its own world. I think that if the credit crisis had started in January when Bitcoin was falling, Bitcoin would have fallen more. And if Bitcoin, let's just say 2 months from now, Bitcoin's ticking up and is passing 10,000 and the credit crisis begins, I think Bitcoin, if Bitcoin starts running, it's going to run right through a credit crisis. Though probably less than if there's no credit crisis. But I think Bitcoin's adoption is in its own world. And I don't, it is certainly affected in general that if everybody has less money, they will buy less Bitcoin. But the adoption rate, it's so small now. It's more about when Wall Street firms start deciding they're going to put in 1%, that is affected by a credit crisis. But at the same time, that decision is separate, and some of that decision is in order to diversify away from credit crises. So I don't know what's going to happen, and I wouldn't try to bet or time it. And I think it's unpredictable, but I also think that Bitcoin's got its own sort of pace that is separate from the existing financial system. Also, there was also the bailout show in 2015 in China. I was watching this, it was collapsing, and this was when I finally understood how the financial system works at age 40, whatever. China was going down, the stock market was in a free fall, and then China came out and they did a bailout. They said the stock market, this is a floor, and they put in money. And I said, okay, like, you know, I used to be like, I don't trust the government and it might not work and all this. It's not about trust, and it's not about, if they know the problem, they know how much money they need. When a bailout comes, it's usually enough. And as soon as the Chinese government came out and said it's a green light, I went and I bought some Chinese stocks, and they just went up and up from there. And now I'm out, right? So, and by the way, I got out before it started falling. Maybe I was just lucky, but for other reasons. But nevertheless, watch. I wish in 2008 I understood more about what was happening, because once those bailouts came, I should have gotten right in, and I was slow. I think that's all I want to say. Let me know your thoughts. Thank you.